they moved the button yet again, Rodney. So it
How many
I
updates do you get a week?
well so we're a Teams shop at work, so I don't use Zoom a whole lot anymore. And what's fun, what it seems like is, and I thought it was originally like a size of the window thing,
Yeah,
but sometimes it's buried under a thing now, and sometimes it's not. It just I don't know if they're just A/B testing me to see at
it
what
could be.
point they'll break me emotionally. But no,
I don't think mine ever changes. I've never. So my problem is different things that I have going on. I find myself on a Teams call at 9 a.m., then a Zoom call at 2 p.m., and then a Google Meets, which is the worst of all of them, by the way. Google Meets is just
I
awful.
I agree.
Yeah.
Well, welcome to video chat, where we
Oh,
discuss the latest office
yeah.
productivity software.
Yes, exactly. Jacob, what's your favorite video conferencing software?
We do everything through WebEx.
Ah, see another
WebEx.
one. Yeah.
There used to be
So
something called Blue Jeans. I wonder if that's still around. That
I've
was
never heard of
I've
that.
never heard of that one.
when I was at Cargill. We had something called a Tanberg. Have I talked about this before, Ronnie? So, all right.
Mm-mm.
So I've worked at when I worked at Cargill. I most of my career I worked actually out of my house, which is a pretty unusual thing for a trader at Cargill.
Yeah.
And this was pre-pandemic, right? So this is starting in '07. I was out of my house. So we had this thing called a Tanberg, which was a point-to-point video conference system. So you
Mm.
literally called another machine as opposed to you being on a computer and whatever. So it had like a dedicated piece of hardware. And so this was the other side of it would sit on the other trading desks on a lazy Susan.
They
So
could
like
like rotate it
they
around.
could rotate. So and it was funny because it was easier to keep track of what was going on the desk with my team when I was running things from home because I could hear everything happening. And
Yeah.
like when I'd go into town or whatever, because I'd be stuck at one end or to the other of the desk and like I had no idea what's going on the other side. Like,
Yeah. The other thing you were right there in their face. Like it didn't feel like it, right? But you were right there.
I was right
So
there. Yeah. And so like if somebody needed me, I mean, it was right. It was right there. It was a surprisingly good setup. I mean, I don't know that it would scale well,
yeah.
but we figured it out.
Because you were on a TV, right? It was a monitor.
Yeah,
Yeah.
it was
Yeah.
another monitor that was just for that. One time somebody thought it'd be funny to turn it off. That's one of the few times that I got visibly pissed at my team. It's like, and that was it. One time it happened. Although my favorite was one day I was signing off and I was like, "Hey guys, I'm gonna go. I know you guys talk shit about me when I hang up. Like it's okay. Like
Yeah.
and we could have heard a pin drop. It was like they thought I was secretly listening into like what they were saying. And
Really.
that's the way it goes. When you're the boss, people talk about it. It's fine. It's all right.
Yeah. No, that's part of the gig. I remember that, Gabe. I remember you were, well, first off, I tried being the second remote employee for Cargill and was denied by you, by the way, I'll point that out. But and then we used to joke and call you like Max Headroom or whatever. Remember
Sure. Yeah.
that's a was that Max
Uh,
Headroom, right? Yeah.
Jacob, do you know Max Headroom?
Who?
Max Headroom.
Can't
Like
remember what came first. It was like a character in Pepsi ads in the mid to late '80s. There was also a short running sitcom based on
mm,
maybe sitcom might not be the right. Well, I guess it is. Yeah, sitcom. It was a
yeah, I feel like
comedy, I think.
it was like MTV related somehow, right?
I think that was the vibe, but I mean,
Okay.
it was super '80s, super '80s. Like, um, yeah, and it was a thing where they wanted it to look like it was animated, but it was actually like a guy and a ton of makeup.
Hmm.
Um,
You remember that, Jacob?
I'm an 83 model, so
You're 83 and you don't know Max
just missed it.
Headroom?
He's firmly
Yeah.
he's
just
firmly
missed
in
it,
the
I guess.
millennial
Yeah.
camp.
Yeah, I guess so.
He,
Yeah, that's
he
right.
you you and I, Ronnie, like I feel like I see this more and more, like this whole zillennial, this micro generation thing. It seems like it's a real thing.
Well, yeah. Yeah. And especially for people that have older brothers and sisters. I think that's my deal. It's like, um, my oldest brother's 10 years older than me. So it just feels like I got exposed to stuff like older than me that some people my age, I'm like, we don't even relate, right? Because they never heard of like Tiffany or whatever. The band, I'm saying. I had
You were
older
street
sisters
smart,
too.
Rodney.
What's that?
You just were street smart ahead of your
I don't
time.
know about that. I don't know about that.
Sounds like Rodney was singing "I Think We're Alone Now" into a hairbrush, is what I'm hearing.
Good reference. I like it, Gabe. I approve. Definitely approve.
Well, there's a scientist that we're doing some work with, and he's like 1 year older than me, and so it seemed well than us, Rodney. So we're 79 models, Jacob.
I'm 80, January of
You're
80.
80. Okay.
Yeah. Yeah.
Sorry, I forget. You're younger than me, Rodney.
You had to make sure he jumped out of the 70s.
That's right.
But there's a guy a year older than me, Jim Kellner. Actually, you don't know. Definitely, you know him. You don't know Kellner. Like great guy, awesome scientist. But like we were just talking about like cultural stuff, and it's funny, like even that year difference, like how much harder he leans Gen X.
Yeah. Right.
I didn't have any older siblings, so I didn't have that pull.
Yeah.
Anyway, tech talk and then generations. Like that's
Yeah. That's right.
No, I'm the oldest too, man. So I'm with you.
So Jacob Chapman on the call with us today. Jacob, good to see you, man. I don't think you and Gabe have met before,
no,
right?
it's good to meet you.
No, you too.
Yeah. So Jacob, I'll tell you the reason Jacob's here. I was talking to a customer the other day, and one of my kind of core thoughts that I use when I'm marketing grain is this cost of money, right? Like the missed opportunity. The penny in the hand in December is worth, more than a penny in the hand in June. And I was like preaching this to one of my customers, really talking through some very detailed things. And he stopped me and he goes, you sound a lot like Jacob Chapman. He's like, I remember 5 years ago, I was talking to Jacob, and Jacob was saying, hey, look, man, I'll loan you money as long as you want, but like you need to know that it costs you money to hold on to this stuff, right? Jacob was what are you trying to do? Talk yourself out of a job there, Jacob? What was the plan?
I always tell everybody that we're only as successful as they are, right?
Hmm.
So if somebody's giving us all their money, then they're not going to be around real long, the way I look at it. So,
That's right.
believe it or not, I've talked myself out of many loans over the years, trying to make sure people are successful so we stay successful, right?
That's awesome. Yeah, that's awesome.
I hear it's easier to keep existing customers than find new ones.
Yeah, that's right.
That's the rumor.
Yeah, I always used to joke that I've been trying to eliminate my job since I was like, 19 years old and haven't been successful yet. I think I actually was successful at ADM actually, but that was the first time. So Jacob, if you would, man, introduce yourself to the crowd here. Tell us a little about yourself, your background, stuff like that.
Jacob Chapman, been at or part of the farm credit system for coming up on 19 years here. Grew up in LaSalle County, Illinois, and then through interests in agriculture, ended up at K-State and got an ag business degree out there. Dabbled in a little animal science as well. And believe it or not, I got roped into the credit world because there was an opening to be a land appraiser.
Okay.
And I found out that wasn't for me. Maybe a little bit slower pace than I would have liked it to be, but I got my foot in the door. So essentially just asked them what else they had. I liked the company, but that just wasn't the lane I wanted to be in. So they shot me over to the lending side, and I've seen us go from First Farm Credit, which was the name of the company at the time, to what is now Compeer Financial, and been a part of this cooperative company ever since. Going to be 19 years this summer. Was able and fortunate enough to come back and work in kind of my home neighborhood, which comes with goods and bads, depending on what you're trying to accomplish. So, that gave me the opportunity to run across people like yourself, whether that be at a pork chop cookout or a high school basketball game or whatever that might be.
Yeah, that's right.
Nope. Family and I reside just north of Seneca, Illinois now, and I've got a freshman in high school and a son that's in junior high, and they play sports and we show some cattle, and just because I need something else to do besides work at Comp here.
Yeah, there you go. What kind of cattle do you show?
Registered Herefords for the most part.
Your Herefords.
We'll get some steers every once in a while in the mix, but mainly that.
Okay. Yeah, so me and Jacob met probably 20 years ago now, 15 years ago. I was at FS, I think, and Compier used to come through, and well, I think it was First Farm Credit. We're going to spend some time on that here, Jacob, if you're comfortable. But Jacob and the company that he worked for would come through and make hot dogs or whatever during harvest, and we kind of see him there. And then we have kids that are the same age. So every once in a while, Seneca? You're not Seneca. You're like, it is Seneca.
Yeah.
Every once in a while, Seneca makes his way down to Dwight or vice versa. I'll see Jacob in the crowd. So, was your
pork chops, Rodney, not hot dogs? Come on now.
You were pork chops. That's right. Yeah, sorry. You were hot dogs. If we were sponsoring, it was hot dogs. But Compier was definitely pork chops. Yeah, that's right.
Yep, that's right.
So your entry job with Compier was the land appraisal thing?
Yeah. I made it a whole 5 months.
All right. What's that look like? Like you drive around? Did you drive?
Yeah. So I mean, it was a good entry segue into the company, and when you're an appraiser, an order comes in and you need to go out in the countryside and do your visual inspection, right? And a visual inspection on a bare 80 acres is pretty exciting stuff. So I would notice neighboring farmer or whatever working on a planter or wrenching on the combine or something, and I found myself swinging in and introducing myself and chewing the fat with them for a minute or two, and then the dreaded back to the office and write up the report for 3 to 4 hours, right? And kick.
What were they expecting you to find on a bare 80, Jacob? Like when you were going out, like what would have been notable?
Well, somebody either bought this piece of dirt at an auction or a private sale or something like that, right? And we, at the time, we were pretty hard line in the sand that we would only loan 65% of what that parcel was valued at, right? So we'd go out, do the visual inspection, make sure this grade A bare 80 wasn't a surprise that had 2 or 3 Y-shaped waterways in it or terraces in it or something like that, that it actually was what it was supposed to be. And then your appraisal typically had a sales comparison approach in it to where you'd go back and you'd look up your soil types and find 4 or 5 other farms that matched up with that to prove the value that you put on that thing. So, but it was always good to talk to that neighbor farmer and make sure it was as good a piece of dirt as the guy who bought it thought it was, right?
Is that mostly satellites now doing that? Or are you guys still sending people out?
No, we still, we have a bigger stable of appraisers now than we did back then, and they still go out and look at properties, and there's maybe different tiers of how they do that now. If a loan is under 300,000 or whatever, it can be a quicker appraisal than maybe one that's a purchase of a couple million or something like that, But yeah, things have things have changed a little bit, but no, company was good enough to get you fully certified to do that while you were working there. So it was a pretty good gig to get started with.
Yeah, that's cool. Remember what land prices were going for in that 5-month stint that you were out there?
Well, that would have been summer and fall of 2007. So the high end stuff was probably 10.
Yeah.
Somewhere in that neighborhood.
Yeah.
So now we've doubled that and then some with some of these sales.
For sure.
So
yeah.
Not that the market is double, but we've seen it.
It has not. It has not. Yeah, I don't, Gabe, did you catch that record? Was there a record sale in Iowa last week or something like that, Jacob? I don't know if you track it anymore, but
yeah, I don't know if it was a record, but it was, I mean, out there, I just keep waiting for him to hit 30.
Yeah. Well, I think this was 24, right? Or something like that, 23.
Yeah. Yeah, I don't think we've crossed 25 yet out there, but
Got it.
Yeah, that's what I was going to say. The number I heard was 24.
Yeah.
Had not seen that, but I mean, my whatever algorithm still points me that way most of the time when those pop up. Certainly when the record sales.
Sure. Right.
Uh,
Yeah, and I don't know, I mean, on the land thing, it just feels like there's a lot of outside money getting put in that land deal, right? I was listening to a guy the other day talking about land, I think since like the 80s, which maybe that's not a fair comparison, but has appreciated 12% like year on year over the average of that, 20 or 30 years, 40 years. Like that's a gigantic investment.
45 years.
Yeah, 45, whatever. And I can't remember the beginning date, but it was like, man, a lot of times you go to somebody talking about money, you're like, hey, if you just would have put that money in the S&P 500, you'd be way ahead. Well, I don't think the S&P's returned 12% over 20 years.
No, it'd be about 7, maybe 8. Yeah, I mean, the land thing's tough though, right? Because it's like you can't. Well, I guess maybe it's a fairly liquid asset. I don't know. You can't sell it anytime you want, probably. But
yeah, would you call it a liquid asset, Jake?
Oh, I think it's a pretty liquid asset today. You just kind of have to plan around it, right? It's a big enough asset that if you liquidate it, you need to have your ducks in a row and be prepared to what comes with that.
Yeah.
If you don't want to stroke Uncle Sam a big check for just selling it with your 12, I'll use your number with your 12% appreciation rate, right? Then, no, they're to your outside money comment. Yeah, I mean, there's with these data, not to get too far off on a tangent here or anything, but
that's what we do
with all these data,
we are
all these data centers. Yeah.
Data center.
No, with all these data centers that are on the docket for approval or have been approved, I think there's, if it hasn't already started, the influx of 1031 money to come into the market off of those things is going to be significant.
What's 1031 money?
Be the right word.
What's 1031 money?
I'm sorry, Gabe. Yeah. No, so these guys will be looking to move all this 1031 money into other ground, and
I don't know what 1031 is. What is that?
So if you sell, like, I'll just break it down more to a piece of farm ground to keep it a little bit simpler conversation. But if you sell an 80 for 15,000 an acre, and you've got roughly $1 million and change that goes in your pocket when you sell that thing, then if you don't take that money and try and use it in a 1031 exchange to go
buy a similar
buy
asset.
something else.
Got it.
So what makes it a 1031 exchange is you're selling that farm, you're putting 100% of those dollars into an exchange account, a 1031 exchange account, and they hold that until your purchase is ready, for lack of a better term. So you'll have a couple months to identify your property, and then you'll have a couple months to get it closed on, and otherwise you have a 30 to 40% tax liability.
Tax bill. Yeah, and then that drives up prices, right? Because these guys have to roll it into something else, right? It like changes the market a little bit.
Yeah, and I mean, I don't want to speak on it with the wrong framework, but yeah, if you have a deadline to spend that money, you're just trying to get rid of it, right? And if it takes that sale that's 20,000 or whatever to deplete your 1031 funds so you don't have tax liability, then it's a lot easier to spend that money, right?
Yeah.
Than if you're coming to see me and interest is going to be accruing on it.
Yeah. Is 1031, that must be the form they're filling out? Or is that the like tax law?
It's more the tax ID and the tax law with it. Yeah.
One of the greatest things about America is that tax law can turn into a verb. You know,
Yep.
I mean, I can't tell you how many times I hear guys say like, yeah, I 1031 that, right? Like, huh. It's interesting.
Yep.
It's like Brewster's Millions.
What?
Do you remember that movie?
Mm-hmm.
Oh man, what was his name? Was it basically a guy inherits I think it was like whatever. This is in the 80s. Inherits like $1 million, or maybe it was like $10 million, but he had to spend all of it in a really short amount of time in order to get $100 million. So
Got it.
yeah, it's a great movie, and he can't tell anybody that that's what's going on. That's it's part of the Richard Pryor. That's who it is. It's Richard Pryor.
I don't think I'd have a hard time finding $10 million today.
Well, not today, but in the 80s, in the early 80s, spending $10 million was difficult. But it's not. But I mean, it's that basically the dollars become worth less if you can't spend them, right? Through the 1031 exemption.
Yeah. So I always tell guys that there's two things I never pretend to be, right? And that's an accountant and an attorney. But if they are going to do a 1031, those are two of the most important people they need to go talk to.
Got it.
So this was not tax
done and make sure they're doing it right.
Yeah, not tax advice for sure. We're not offering, just for the record, we're not offering tax or marketing advice on this podcast. In case anyone's listening.
Hey, I already told you, Rodney, I'm not a grain marketer, so you're good.
He's not a grain marketer. Poor Jacob. You're banker, right? Is what you call yourself? Is that what you like? You could lender. What do you call yourself?
I guess a lender. Lender, yeah.
Yeah. Yep. All right. Yeah, I didn't give Jacob a lot of instruction coming into this thing, so I asked him to be on the podcast. And for those that don't know, what we do is we get somebody on the podcast and we don't have an agenda, we don't have any real plan, and then we do a cold opening.
I think that part's evident every time.
Yeah, and so poor Jacob, I meant to give him a call this morning and give him a heads up, like, hey, this is how this works or whatever. And the market was up big time overnight, and my morning got away from me. So Jacob got a call about 15 minutes before we hit record here, giving him a rundown of how we operate.
So, well, I mean, I've got some questions. So, like in 2026, right? What's the actual sausage look like? Making sausage look like in terms of underwriting a loan? So, let's pretend I'm an existing customer, right? And I've been with you for 5 years, and for whatever reason, I'm asking for a larger than normal operating loan. Like, what are you doing? So I've got to give you a business plan, presumably, and like here's where that money's going. What are you doing on the back end to like figure out whether or not you guys are comfortable with that increase?
So if you're an existing customer and you're coming to me wanting to increase your operating loan, you're going to tell me, and I'm going to assume that you're increasing the size of your operation, right? So maybe you're going from, I don't know, 2,500 acres to 3,500 acres.
Sure.
Yeah.
Which is pretty good bump, right?
Yeah.
So, kind of a general rule of thumb over the last several years is, hey, what's your cash flow look like? That's one of the first questions I'm going to ask them. Anytime I do a loan for anybody, I'm collecting an updated tax return and an updated financial statement or balance sheet, whatever label you want to put on that. Net worth statement showing their assets and liabilities. Well, the top third of that balance sheet gives me a pretty good visual of a 50,000 foot view of their operational cash flow, as far as their working capitals looking and those types of things. But if they're going to make an increase that large, I'm going to want them to bring me a cash flow projection for the 2026 year also, right? Like if I'm increasing their line of credit by, let's just say 500,000, if they're gonna, or maybe even 600,000, if they're gonna increase their acres by that much, I want to make sure I know what their income projection is going to look like, right? And as all of us on the call probably know, the inputs just keep getting cheaper, right? So we want to see what those look like in comparison to the income. And if they're that size, then I really like them to be at least trying to work with somebody on the grain marketing side too, versus just writing down $4.50 corn and $11.50 or $12 beans on their projection, right? So another expense on the cash flow is typically, hey, what are you doing for crop insurance? Because you gotta survive in advance, right? That's the name of the game too when we're doing this. So in our area, we're fortunate enough that most of these guys have pretty decent APHs. So if they've been on the crop insurance game, then they've got some pretty good guarantees. But if I'm getting to that level of exposure in an operation, I'll generally have to bring a credit analyst into the game with me. Once we find out how many dollars they're wanting to borrow, once I have the initial meeting, one of the questions I like to ask somebody when they come in, or what I would ask you, Gabe, if you came in, is, do you think you can do this? I always love when somebody comes and sees me and asks me if they can afford something. Well, I don't know.
How often do you get a no?
Have you ever gotten a no?
How often do I get a no?
Yeah,
well,
I'm just curious. Like, does that get folks to sit back and think about, like, oh man, what am I even doing? Or
well, I mean, I don't think it does anybody any good if I'm a yes man all the time, right? But if I'm going to tell somebody no, it's usually a not right now, or it's a no because of this. Like I try and educate them through the process, not just a hard no, see you later type of thing, right? Like, if I'm not educating somebody, then what am I doing?
Is there a common place where those things fall apart? I mean, is it like somebody gets over their skis on a debt to income ratio, or is it the cash flow part that they can't seem to make it work, or what's kind of like one of the more common ways that would put a pause on
The
it?
guys that have really made it work versus the ones that are kind of struggling a little bit right now, I would say we've been fortunate in our area the last couple of years where yields have really won out, right? And then it comes down to what's become a bigger piece of the business pie of how you're going to get that stuff marketed. So the guys that have struggled more than others, I think it started with the yields as much as anything, but that hasn't been a lot of them. And then I don't ever tell anybody how to market things, but if there's bills to be paid and that sort of thing, that's where I might come in and say, hey, if you've got a number of different loans with us, or even maybe your operating loan is the most expensive one you have with us, concentrate on that and let's figure out a way to make sure that doesn't cost you any more than it has to. But the thing I don't like to touch on a whole lot that does get people in trouble from time to time, but it's also kind of more of a hot button thing, is when things get good, family living gets a little looser, right? And then when things go back to not being so good, the family living doesn't always go back to not being as fancy, right? So that's usually the last thing I touch on, but sometimes we do have to discuss that a little bit. And I try and softly touch on that when I need to, just because that seems to be a little more of a hot button topic than what fertilizer costs and what you sell your crop for. But
where does that show up, Jacob? Does that show up on cash flow or balance sheet?
More balance sheet. I mean,
it's like buying a boat, like stuff like that.
Yeah, right. Like most guys, when they do a cash flow, they probably don't put enough in there for family living ever.
Yeah.
And I would say on average, us as a lender, we put a figure in there anytime we're doing a credit, but we probably don't put as much as we should either, but we have to factor it in there. We probably put more than they do, but you still got to factor something in there, especially if they're a full-time farmer, right?
Yeah.
If they got a side hustle going on or a job in town or whatever that's supporting that family living, then that's totally different. But that's a great big piece of the pie right now. The guys that have an off-farm job, or them and their missus have an off-farm job, they're in a lot different bracket right now than some of these full-time farmer guys are.
Yeah, I'm sure.
Especially if it comes with health insurance, right?
Oh, the health insurance. You want to go down that tangent all day long.
But that's not a very exciting one to talk on.
So I don't know. The swears that would come out of my mouth could be pretty exciting for sure. I'm new to the buy your own or whatever non-corporate health insurance thing, and it's worse.
Are you buying like yourself? Or are you part of a pool, or are you buying through the marketplace?
Yeah, so marketplace didn't work for us. We went with just a private plan. But the weird thing was so we applied for this family private plan or whatever, and it's like one of these deals where if you're healthy, it's like a reasonable price. Turns out they don't actually cover anything. That's also the thing that makes it super reasonable.
Turns out it's cheap when they don't do anything. Yeah.
Yeah, but I got rejected from the family plan, so they wouldn't cover me, which is super crazy. We're not gonna go into that, but so now I'm on my own plan, which makes it even worse for figuring out how bad healthcare or health insurance is, because now we see like very clearly like, oh man, my plan really sucks on this piece, and my wife's plan really sucks on this piece, and it's just a disaster.
I mean, there's been a handful of times over the years now where I've been on the marketplace plans out here in Mass. They've been pretty good. But all things considered, right? I mean, it feels like there's no real good health insurance anymore, but it hasn't been much worse than anything else.
So the weirdest thing I've discovered, I'm in Dwight, Illinois, Livingston County. There is a section of Dwight, Illinois, although nobody lives there, that's in Grundy County. And to get Blue Cross Blue Shield, I have to be in Grundy County through the marketplace. And since I'm in Livingston County, I don't qualify for it, and it's garbage what's available. Dude, I am not a good golfer. I literally could hit a golf ball to Grundy County, and I can't get it.
It's man, maybe we should get a health insurance underwriter on next time.
Yeah, I'm sure people love that.
I guess, Jacob, are there any arbitrary lines like that end up materially affecting your ability to underwrite loans, or do you have enough flexibility that you can see the fact that somebody might be able to hit a golf ball to Grundy County from their house, and that might change things?
Yeah, that's a new one on me. I didn't even realize that that was a deal. So no, I don't. They try and blur the lines as much as they can for me when I'm out doing things. So I don't have anything that holds me back like that, and I'm probably a worse golfer than Rodney is.
Oh,
I mean,
wow.
so like from my seat, it feels like a lot of this stuff would be pretty well, if I, as me, right, go and ask for a personal loan from the bank, I don't think they're giving me a lot of consideration, right? They're not like they're running their credit report on me, looking at what my balance sheet is as an individual, and then probably deciding, hey, here's the number. Maybe I can push them a little bit on it, but it's not like a real relationship situation. But it feels like if at times you find yourself having a discussion about a boat and like whether or not that was a great idea, it feels like you've got a little more room there to maneuver. Is that fair, or are you headed down? Are there pretty clear guardrails and then you've got flexibility within there?
So I have a lot of flexibility. The way I look at it, as far as a guard, more, I don't have a super narrow path that I have to stay on, right? It's, I guess the best way for me to describe it is I'm a lender, but I try and build relationships with people first, and then get to a point where they trust me to help them with their finances, right? So by you saying you'd been working with me for 5 years prior to this loan request, I sure better have held myself accountable to building a relationship with you over those 5 years to where I feel like I can sit in my office or sit at your kitchen table and talk to you about that boat that you bought, right? And how that may or may not have affected your situation. Or, anything else that has attachment to what's going on in your operation or your day-to-day situations, right? I mean, I've not that you asked this, but I've been doing this almost 19 years, and there's a lot of folks that I deal with that I consider them to be more family or friends now than a client or a borrower, right? Like that's the level of the relationship that I've tried to get to, just to be a small asset or small part of their operation.
Yeah.
So I guess I want them to be as open with me as possible so I can try and help them as much as the tools I have at hand allow me to do that. If that makes sense.
I mean, it does, right? We started talking about how building up a relationship, right, and building up that customer, right, helping them build a good business is outside of I guess on the financial side, right, the more what I don't know what you'd call it, the transactional side of that piece is it makes life easier for both of you. And then I guess presumably if you've been doing it for 19 years, you like that role and want to bring a whole package of value, not just be the transactional side of it. I'd imagine it's a more fulfilling that way. Is that fair?
For sure. Yeah, no. And like back to my original comment, if the folks that give me the opportunity to work with them aren't successful, then they probably don't need me to be here doing what I'm doing, right? Because there's not going to be anybody left to call me or to give me the job security. But I mean, you're exactly right. It's way more rewarding that way. And I mean, I might be covering it up a little bit by saying all that, but I'm still technically considered to work in sales, right? And have sales goals every year and those types of things, but you still got to step back and look at situations like, hey, if I did a bunch of 5-year equipment loans 3 years ago, those things still have 2 years left on them. And the margins for farmers to make money right now are razor thin in a lot of situations. They still got to make those. So sometimes we're a victim of our own success if we're just out here and all we're doing is chasing sales goals every year, right? So you still gotta sit down and make sure you're doing the right thing for these operations when they come in and are putting their trust or their faith in you that you're going to help them do the right thing, right?
Yeah, I want to hear more about this cash flow statement. So I'm a farmer. I come in to meet with Jacob, and let's say it's, I don't know, winter operating notes big, like March, right? It's kind of when guys come in and borrow the money.
January to April 1.
January.
Yep.
Okay. So January, I'm gonna plant, 1,000 acres of corn. I need to borrow some money. So am I able just to walk in and my cash flow statement is, hey, I'm gonna raise 220 bushel corn at, 450 and period. That's it? Or does it take more detail than that?
Gabe, I don't know about you, but I'm gonna need to run that by me again. He was in and out, in and out, in and out.
Okay.
Well, I had it. I can repeat it. So I guess we're wondering how much detail. So if I walk into your office and all right, so you're going to look for a cash flow. You talked about you want, especially for a sizable operating loan, you're going to want somebody to give a little more information than just writing down 450 and $12. What are you looking for from for a cash flow plan? Like what are the things you're trying to see that tell you that that's a healthy operation? Like not just like the numbers, but like what are the types of things I think you see? Like what thematically, like what are the, tell me you know how to run a business without telling me you know how to run a business, I think is kind of what we're wondering.
Right. Yeah. So I mean, we lean a little bit on the U of I farm doc cash flow that comes out every year. And then I generally look up a couple others, maybe in Iowa State or something that's pretty local here. But I need these guys to prove to me that what they're putting down on paper, that's what they've paid for these inputs, right? Like show me some evidence that this is what you're paying, whether that be you've already paid for it, or whether you set that up on maybe some supplier credit at 0%, or a slightly or largely lesser interest rate than maybe my operating loan carries, and then that's a good business decision at that point, right? If you're able to save on your interest expense that way. No, just already done all your homework and you've lined up all these inputs for the year and you know what they're going to cost you, and prove to me that these are set for the year so we can go off of this cash flow, because this is kind of our roadmap for the season, right? The income side might be a little bit harder to nail down, but there are a lot of guys, believe it or not, that when we do those cash flows, they've already got some locked in on the upcoming crop, right? So whether that be an HTA or what it is, so just I want examples, not just, hey, this is what we paid for it last year, so we're going to write that down again for this year. We know that that's not what the world works anymore, right? Year to year on these inputs has not been very consistent price, depending on when you're locking that stuff in and when you're getting that stuff bought. So, and it's not difficult. We can get it all on one page. So it's just a matter of trying to make these guys have a good handle on what they're doing by filling that out.
When they're, I guess, bringing that plan, given that you see a ton of different plans, I assume, how often are you seeing people where maybe their input costs are coming in way out of line, with somebody else, and are you ever trying to help people, I guess, connect on that side, or at least understand where they're benchmarking in reality versus everybody else? Because I feel like if I asked Rodney what he paid for inputs, if we were next to each other, he's going to tell me the lowest price that he paid or the highest price. He's not going to tell me what he actually paid because not because he's best with, but just to remember one or the other more. Do you do any coaching there for those guys in terms of understanding, like, hey man, you're way off everybody else, or like, hey, tell me the secret here because this looks too good to be true. Do you do a lot of benchmarking that way?
Yeah, we try to. I mean, there's guys that come in, and if I feel like they're at the higher end, then I'll brainstorm with them a little bit. Like, hey, have you ever thought about talking to a neighbor or two and seeing if guys can put a bulk order together on this or that to see if you get your price down? And I mean, every operation's different, and I would say that would be like on seed or fertilizer or chemical where you might get a discount or the best discount.
Ronnie, you said the market's bumped up. Should we talk a little bit about that?
Yeah. So, yeah, woke up this morning, corn's up 4, putting in, which 4 doesn't sound like a lot, but we've been on kind of a tear on corn. Just kind of
When you
glancing
said
here.
you're talking about July.
New crop, December corn. Yeah. So we put in a low, call it 469 on April 14th.
Yeah.
And looks like we closed at 495 and 3/4 today. So added a quick 25 cents to the corn market.
In 2 weeks.
Yeah, in 2 weeks, and really like no new news there. So obviously planting is going on, and we can talk about that a little bit. Um, we'll have a new report out this afternoon on planting progress. So I think we likely planted some significant corn and beans last week, I would think. Guys in my area are rained out right now. We had some storms roll through, and I'd say, Jacob, our area, we're behind on planting progress, right? Would you same over by you?
I would agree with that. Yeah.
Yeah.
I had a guy tell me this morning he thought he had all of his corn planted by the end of April last year.
Yeah. Yeah, exactly.
He's maybe 25% done.
Yeah.
Has it's just been wet, too wet to get it done, or?
Yeah, been wet. And then this week's gonna be really cool. So I know, a lot of times guys will like hit it hard and work super long hours, to try to finish it up before rain or something like that. This time, because we were looking at some cooler weather this week, I know a lot of guys that just didn't do anything on Sunday. They're just like, take the day off and relax before the rain came in on Monday. So I don't, it's like everybody gets a little concerned when they're delayed on planting. Everybody likes to have planting done. But I wouldn't by any means say this is like super late or a problem yet. And then, yesterday I'm out seeing some guys and I stopped by this guy's shed and he's showing me his new high-speed planter that he just got, and he's saying, I'm planting 10.5 miles an hour. It's like 24-row planter, 10.5 miles an hour. Like that's like running a sprayer,
Yeah.
you
Jeez.
know?
Yeah. So he's excited because he's got a reason to have it now. Yeah.
Yeah, exactly. So they get to push it a little bit. So,
Uh,
but and then Iran. I think what's been the hardest thing here is trying to have any line of sight into what is actually happening in the Middle East right now.
well, so I mean, I was going to say, oil is up like 4 or 5% today, I think. So that's probably driving up corn today. I, and I guess how's that affecting things more broadly? I mean, is corn still moving pretty well with oil? Is that
They feel
no?
like they've kind of separated a little bit. So we've had a couple of runs on oil that haven't made their way into corn
Only
and
corn.
beans really. Where it did make its way into is fertilizer prices. So really, for guys that didn't have fertilizer bought, apparently very hard to get your hands on, any fertilizer. I'd say in our neck of the woods, most guys have their fertilizer bought for this year or whatever. But looking out to so like what I've been talking about, guys, is hey, you got your inputs largely locked in. Like, I wouldn't worry too much about fertilizer prices as it relates to 2026 corn, right? But, a guy brought it up to me today. He was like, yeah, wait till you see my diesel and gas bill from, for the fall. So we're going to see some added input costs for sure.
I wonder if somebody just figured out that corn goes into ethanol. I don't know.
I mean, it followed it for sure. We've seen it, but it just hasn't been perfect.
Yeah. Yeah, I mean, the market's been real weird with the Iran thing, right? Equities are strong, dollar moving around a little bit, but I mean, we've seen some bonds weaken, like that market come off, but then meaning we having to pay more to get people to take the debt, and I don't know, man. It's I get yeah, it's weird. I mean, I guess part of it is also after Russia, there was a pretty big move, at least in Western Europe, over to non-oil based fuels for power.
Yeah.
I think it was last summer, electricity in France went negative for cost because they had so much solar production that like it just had nowhere to go.
That's great.
So there's some weird things like that. I think it's yeah, I think there's been a systematic shift in sources of energy, although obviously oil still fairly important.
Yeah, right.
I don't know.
Yeah, I'm actually worried about inflation for 2027 here for the farmer, right? Jacob, you guys talking about that yet or worried about that at the moment?
Not too much. I've actually, the whole Iran thing kind of actually took interest rates and ran with them a little bit when about the same time fuel prices went up because unlike a commercial bank, we're funding all of our loans off the bond market. So the bond market just kind of went berserk a little bit in the wrong direction for my guys when all that happened. So I'm super interested to see what the Fed does. The Fed over the course of 2026 here will dictate the cost of money for us greatly on how they decide to look at inflation. To your point, to this point, they've kind of just let the dust settle here and haven't really touched much. But I thought they were actually having a meeting today, or so I haven't heard what. Is it Thursday? But and yeah, I mean, I'm trying to keep an eye on that. Just finishing up real estate loans before guys went to the field and everything got kind of interesting. Trying to make sure we could give them the rates we said we were going to give them and lock those in. So that's more of a fixed cost. But yeah, I'm with you. Paying attention to the inflation part. I'm just kind of hoping maybe we can not go too left or whatever off of a Trump tweet as we go through 26 here. I mean, we've kind of got rates back down from when they went up when we started participating over there. So I kind of like things just to settle out if possible, but and then obviously go down a little more, but we'll see what happens.
When you say rates are going crazy, like what do you guys like anchor? Like what are you guys looking at, like a 5-year for that or a 3 or because I got to imagine it's not the super short stuff.
So we can do anything from variable rate to a 30-year fixed on our real estate loans. But the way we fund those and the way we try and, I guess, build those interest rate packages is we're always buying 3-year, 5-year, 10-year, 30-year bonds every day and kind of trying to blend those out when we're funding these loans, right? So I pay more attention to the 5, 10, and the 30-year. Just that gives me the best, I guess, average of what things are doing every day. And I mean, it had been a long time since I saw our rates move 0.25% overnight.
Yeah,
And we saw that happen 2-3 weeks ago.
that 7 and 10 year range is pretty. That part of the curve was pretty rough. Like the near term stuff
Right.
hasn't moved a bunch, and 30 years been a little bit more stable. But yeah, yeah, uh, it's interesting. Who? Well, no, I was gonna say who's man. Like I guess that's probably a whole department at the bank figuring out how to blend those purchases
You got
and
it.
manage it through that
Jeff
risk.
takes care of that.
Yeah, just out the side, Jacob. You're not managing the bond portfolio.
Yeah, no, I don't. They don't give me the keys for that. I know enough to be dangerous, right?
Yeah, it's yeah. Um, so yeah. I mean, the market. It's made the least sense to me uh, at this point than I've ever seen. I get, given a war in a energy, a critical energy supply chain point. Like
Yeah.
it just, uh, man. And I guess when you see the thing and it doesn't behave the way you expect, right? So I guess I'm not surprised to see corn pop, right? Not surprised to see oil pop. Surprised to see equity still pretty strong. I know there's volatility in the rates, but Jacob, like you said, those have come off lately. Dollar's basically, where it's been. It's been more volatile than it has been traditionally, but it's still we're I think like between a $1.15, $1.18 range, which isn't a small range, but at the same time, would have thought that would have seen more activity as the market kind of figured out what it wanted to say about things. I Yeah, it's just I, my concern is not knowing where the weak spot is because it's not shown up yet. But as far as I can tell,
Yeah. Yeah. I mean, I was listening to a guy the other day. He thinks it's the housing market, right? Could be in another problem area, but I don't know.
yeah. But I mean, we've seen those. Like, I mean, you see the articles about whatever Florida. There's a bunch of stuff available. You can buy a house for half price or whatever. And I mean, but Florida was also in a bubble, so it's not crazy. Also, you can't get insurance in Florida, and so nobody will underwrite mortgages, and so it's not a shocker. Nothing's selling. I don't. I think it's a little bit of a red herring for an overall housing crisis flag, just
Yeah.
because like it's a whole different situation. Um, yeah, I mean, you're unsurprisingly seeing these issues where basically because of climate change, right? There's more systematic risk. Insurers won't underwrite, so those home values are dropping because people can't get mortgages to pay for it, right? It's the opposite of the 1031 problem. Uh, and I mean, housing's maybe cooled off, but it doesn't. I don't know, man. They're still building a ton of houses. People seem to be buying them, and all you see is about how people can't afford them. So like, and rates aren't
Yeah.
crazy high. They're, I
I
mean,
I
yeah,
do think that the problem with the housing market right now is everybody that owns a house borrowed money at 2 to 3.5%, right? And you bought that on a 30-year fixed, and I'll be damned if I'm going to give up that,
sure, yeah,
2.75 to borrow money at 7
Yeah.
for anything else. So what it does is it just locks up that supply of houses, right? So to your point, they're building houses and all that stuff. But I think what's interesting is the concern on the housing market, I think, is like a bunch of cheap money comes out, and suddenly it's like, hey man, I don't want to be stuck in this house at 3.5%. I'll go borrow 4.5 or 5 or whatever that is. And you start to see that, and it might really cause some problems. I don't know. Again, I'm not predicting what the housing market's going to do. I don't care what the housing market's going to do.
I, yeah, I'm confused.
Yeah.
So Rodney, what are you telling guys to do with a spike like overnight?
So the reason
Like,
you
are
didn't get a
you telling
call
all the
today is we're selling. I mean, you just can't pass up $5 corn. Gabe and I have talked about it for many times. Corn just doesn't spend a ton of time above $5. And
Hmm?
you know, maybe this time's different.
Because it's
Yeah, go ahead.
because it's not like the balance sheet's changed, right?
No, exactly. Right.
I mean, it's So hopefully you told all my guys to get like 50% sold that we both work with, right? You put them at the top of your list for me.
Top of the call list today. Yeah. Yeah. I will
Yeah.
say, one of the things I kind of want to talk to you about was I really focus, Gabe talked about if you ask him what his input prices are, you're going to get a different number from everybody, even if they're the same, because they kind of like
Right.
anchor on these different things. And so for grain marketing, very similar. If you go to the coffee shop and ask a guy what he sold corn at, he's going to say, 4.95, which is today's price, right? Yeah,
Because
I
he's a
sold
super
4.95
genius and
corn, right?
amazing. Yeah.
Yeah. But the guys working with me, I'm showing it to them converted to cash, feeling worried about fall stuff first, right? So all of a sudden, even if we sold 4.95, which on the way up we sold 4.70, 4.80, 4.90, right? Then I'm also kind of applying a 30 under basis to a lot of it. So it's like the number that's showing up in my books is 4.45 or whatever, right? And it's like, man, I don't know. The guy at the coffee shop sold 4.95 and I sold 4.45. It's
What the
like
hell, Rodney?
we're not even talking about the same number, right? It's not even close to things. And where this really peaked for me was a couple weeks ago when right before corn kind of crashed again. So old crop corn makes its way to 4.65 or whatever. And I had a guy call me up and say, oh man, I feel really stupid now that we sold that 4.30 corn, right? Back in like literally December. And I was like, hey man, you're borrowing money at 8%. Like 4.30 December is, yeah, it's not the highest tick of the market, but it's not 35 cents away from, this 4.65 cash. So that's one of the things that I'm really focused on trying to help farmers wrap their head around. And I don't know, Jacob, what's been your experience with this stuff? Like trying to understand what 4.30 corn is versus 4.65 corn. You know what I'm saying?
Yeah. Yeah. I mean, at 7.5 or 8%, like I just did a quick deal, and I was actually talking to Lifelight last night, and I was telling him the story you shared with me to get me on this deal. And I mean, if I just used like a $50,000 interest payment off an operating loan, right? And if if a guy can have a zero balance on his operating loan, or at least shave half of it off of there, you could be talking anywhere from a nickel to a quarter per bushel,
Yeah, that's right.
depending on how you play that. And um, now, to your point, basis kind of comes into play, and you never know what that's going to look like depending on when you're selling it. But I just, I always just try and break it down to a dollars and cents standpoint, right? Like if a guy's got $1 million line of credit and he's paying me $130 a day in interest, and you can sell grain out of the field or sell it before the end of the year and clean some of that up, then to your point, 430 might be the same as 450.
Exactly. That's right. Yeah.
Rodney, do you have a way that you
So,
frame up like,
um,
hey, here's every day that you're waiting not to pay off the loan. Here's what it's costing
I'm,
you.
I'm thinking about it. I am thinking about it. So the problem is that there's a lot of nuance to it. So think about Gabe, like um, deferring income, right, for tax
Yep.
reasons. So all of a sudden, like my 8% from October to December kind of turns into zero, right? Or like probably 30% minus 8. So probably like 22% or right, because of the tax benefit that I'm getting.
Got it.
Similar to the 10 or
Sure.
1031. Um, how did I mess that up? 1031, is that right?
1031 is
1031.
that's the thing. Yeah.
Yeah. So what I have done, I just recently created this like dashboard. I'm calling it a what am I calling it? Report card for grain marketing.
Uh,
So hey, if you're watching, Jacob had a little bit of a problem here. So he's not visible on the screen anymore, but you're still with us, right, Jacob?
Yep.
Good deal.
I think he
So
was intimidated by our prettiness, but
yeah, that happens.
Hmm.
So anyway, around cost of money. So what I just developed in my system is this, like, I'm calling it a report card. Oh, there he is. Hey, Jake. And long story short, what it does, it takes every every cash grain contract that a guy sold and converts it to today's value uh to compare it to the market, right? That's like essentially that's what it's coming down to. So long story short, an October sale from October 2025, what I'm doing is adding the cost of money to April here, right? To say, hey, your 440 cash sale in October feels like 460 May, right?
you're,
Or
you're saying
April.
because you weren't paying money on that.
Exactly. It's like trying to compare,
Yep,
relative values. And then anything in the future comes back,
you pull it
right?
back.
So, hey, your 460 that you sold in July, that hits at like 455 today. Um, so interested in both of your opinions on if that is like the right way to think about it.
I think so. Um, you're always kind of going to be chasing a little bit of a moving target, though, right?
It's always moving.
As long as you're okay with that, then I mean, I think you're looking at it the right way. Um, yeah, I mean, we chase a lot of moving targets, right? So I'm still thinking as I'm answering your question. So I'll listen to Gabe while I'm still thinking.
Well, I mean, I think it's pretty cut and dry and looking like in this moment, now that you're starting, looking at old crop, that feels clean to me, right? Like there's not much to it. I think the new crop's trickier.
Interesting
Because
you say that because I just showed it to a farmer and he was like totally understood the old crop stuff. And when he looked at new crop, he was like, I don't know. I think you lost me.
well, because it's tough because like if I make a sale right now, unless I'm getting advanced cash that I'm using on something, like bringing it to today doesn't make sense. Uh,
Yep.
you you I guess want to try to bring it to where the expected delivery window is.
So I did cup it at October for new crop. So if you
So
sold,
if I sold
let's say you sold
these,
January 27, it would
you're
discount it to October 1st of 26, right? Which is not perfect, but that's what it does.
yeah, no, I mean that seems reasonable. And then you have to remember when it becomes old crop, what was your actual original anchor to normalize everything? That's where it gets real tricky, right? It's funky
Mhm.
in the math, not funky in the math, but it just because what happens is so right now you're like I said, this I was saying like the old crop just makes sense because you're just starting now. But if your kind of your benchmark price is that October, whatever the first delivery is, right?
Yeah.
That's your benchmark for figuring out NPV backwards and forwards. And I think
Yeah.
that's the piece that you have to. I think if you lock that down, you're okay in terms of like being able to consistently evaluate those things. And then it becomes a question of like how real do you want to make it, how live. Um, but I that feels like a healthy way to understand, to contextualize the decisions that you made.
And that's exactly why I'm doing it, right? I
Yeah,
want to be able to like say, hey, we made a decision. We didn't know everything, just like Jacob said, like lots of moving parts here, but we made a decision and this is why, right? And that's a big part of that.
yeah, yeah. I mean, yeah, I think that's helpful.
You're going to get a lot more traction on that, Rodney, from the guys who actually know their cost of doing business too, though, right?
Yeah.
Versus the ones that don't.
Yeah. Yeah. I mean, I like most guys can tell me a percent, like a cost of money. to your point, I'm not sure that that tells the whole story, right? Like if a guy's borrowing money from you at 7%, there's a lot of other things going on in there that he's, probably a little higher than that 7% cost of money. But I feel like that's like a pretty simple way to compare it.
You might even if you're trying to gain traction on this with guys, like I try and challenge guys to not just do a cash flow, but do a cash flow on a farm by farm basis. If they want
Field
to
by
take it
field,
another
you say.
step, yeah, field by field basis. So maybe you can
Hmm.
even play with it from that angle a little bit too. Like, hey, if you're trying to get guys to warm up to this, let's take the bushels off this field and play with this.
Yeah,
Like, do you have a cash flow on this field that you know where you got to be?
got it.
And maybe that's more of a micro level than a macro level that they could be a little more comfortable with.
Because all
I
of a
don't
sudden
know.
you're not worried about weighted averages and stuff like that, right? That's what it does. It simplifies that.
Right.
Yeah.
Well, I challenge guys to look at a field by field basis from my angle, just because maybe you always have that farm or two that's dragging everything down, right?
Yeah.
Well, maybe you don't need that one. And I know that's like the last thing any farmer wants to talk about is giving up a farm, right? Giving up a field. Oh my
Right.
gosh. We can't do that. Can't do it. But I've had some guys really tell me it's kind of opened their eyes though.
Hmm.
I feel like you probably need to do both. Like it's two very different questions, right? I do think with, I mean, if not having to do your work, Rodney, or yours, Jake, I like for those marketing decisions, I think you want to be portfolio based. I mean, heck, Rodney, you said you take it to a level of thinking about not just the crop itself, but across crops, and I think that's the right way to look at it from a again running a business perspective and managing cash flows. You got to look at it like that. But then the flip side is that part that you're talking about, Jim, in terms of benchmark. Then you should be taking it to individual assets, right, and benchmarking performance, against that. But I think that largely is probably on the cost and yield sides, independent of price,
Yeah. Right.
independent of marketed price. And because the danger you can run into with that is you start doing weird mental accounting. Like it's okay to sell grain for this field at this price because that's the break even for that field, and I think it may cause you to make some inefficient decisions. And you have to make more of them. And like we are terrible at making decisions to start with.
Right.
So I think the more you can simplify how you're thinking about it, you're better off with that pricing process.
Yeah.
Um,
One more layer that I added to this that I'm interested in your feedback on, especially Gabe, is I'm trying to benchmark versus the opportunity that existed in the first place, right? So,
okay.
the thing that people talk about is like if you market in the top third of the market, then you're probably good. But what the hell does that mean when we're talking about carry in the market and all that kind of thing? So, what I built is it essentially goes back in time. So for the whole crop year and discounts the cost of cash again on the bids that were available. And I'm showing the highest bid ever available for each month
Mm-hmm.
and the lowest bid ever available for each month. Lowest bid in their market um that they like can sell
Sell
to, right?
to.
So I'm
Yeah.
not like using some stupid thing. All five equivalents. And like comparing it to that. All right. So I show this to a customer today, and he had a contract that was below the low for next year, right?
Okay.
And I was like, what's like, this isn't
How did that
good.
happen? Yeah.
So, long story short, the reason it did that, Gabe, is because way back in, um, oh, how'd this work? Oh, because nobody started posting cash
Cash
bids for
bids.
this price until we fell off, right? Or whatever, or
Okay.
until we were up. So, whatever. It doesn't really matter. This is mostly anecdotal stuff, but I was thinking, is it, would it be better for me to say, hey, show me the highest futures price and the highest basis combined, not that they were on the same day, right? Which would be like
Yeah,
on the greatest marker in the world, I
yeah,
locked in
right. That's
futures
what
one
you
day and
did.
basis
You
comes
did a
tomorrow.
HTA and a basis contract separately. Yeah. Well, so the part I think you're missing that when we talked with Jake, I thought was a good evolution of this thinking about benchmarking is thinking about like how much of that opportunity was available, right? So that's a moment, right, in time, like literally a singular moment, that highest futures price, right? That traded for a quarter of a second or something.
Yeah, right.
And so I probably wouldn't even take the high. I would probably just use close prices to start with because
Yeah,
I
which
think
I
that starts to already throw you off the high low thing. But then I would do it. I might like I forget what the word is, but bucket them like by 10-cent increments or something. Because I otherwise you end up with like this, illusion uh, illusion of detail or illusion. I forget what the term is. Illusion of accuracy. Like,
yeah,
and so I think if we thought about like, okay, it spent 60% of its time above 460, like, yeah, you should have freaking sold above 460. Like, what were we doing? We were asleep at the wheel,
sure.
right? Like, so I think things like that are probably way more appropriate comparisons than was I the most amazing basis trader and futures trader
Yeah,
in the world.
yeah,
Um, like that doesn't exist, right? And so I I think bucketing like that, if you're trying to benchmark, is so how many days did we spend in like these 10-cent chunks? And I'm picking 10 cents obviously arbitrarily,
right.
but something like that. And that would tell me how we did. Because if you're sitting at a price and it was there 80% of the market or 80% of the time, and it's probably not going to be but maybe a 30-cent range,
Yeah,
you know what? That's where you would expect to be priced. Like
yeah,
pricing outside of that would be anomalous. Yeah. And I think that's what you want to understand is did you get sloppy? Did you panic and sell? It can feel like you panic sold when the market was lower if all of a sudden we finish on a really high price. But if 80% of the year was,
exactly.
at or below here, it's so as I say, I don't think those moments are the right way to do it. I think
Yeah,
bucketing like a little less finer of a tool, a little less precision, illusion of precision. That's what it's called.
yeah, exactly.
Mhm.
Uh, yeah, I think that's a better way to benchmark, like what normal humans are capable of.
Yeah, right.
Yeah,
Cool.
that's my thought.
Well, most of your conversations, Rodney, that like you had with me, guys were looking at old crap anyway, right?
Uh, for you mean like just that's what they were curious about?
Well, like your example of selling 430 corn back in December versus
Yeah,
460 corn a month ago or whatever. The conversation hinged on old crop anyway,
yeah,
right?
yeah, for sure. Yeah, because there's knowns, right? I think the old crop is easier for guys to wrap their head around, right? Because next year we don't know. We're literally just throwing darts out there for sales for next year because you don't know enough information.
Right.
Yeah,
Well, the greater population of the farmers still likes to own the kernels versus owning it on paper, don't they?
100%. Yeah, that's
Ronnie, I
Which
disagree that
that's a
you're
different
throwing darts.
conversation. Like,
you disagree what?
That you're throwing darts. Well, I'm just saying, like the marketing window, right, for the 2026
Yeah,
crop is roughly 2 years long, and
yeah,
we're like a quarter of the way through that period.
yeah,
So you've actually got 25% of your data already populated.
yeah, yeah. That's true. It's definitely not throwing darts, and I don't want to make it sound like that, but yeah, Jacob. So to that point, one of the things I'm getting ready to kind of make a presentation about is again based on the cost of money. These guys, I'll give an example of a guy who I was talking to has a brokerage account set up with me and likes to put corn in storage at his local elevator in the fall, right? And his wife happens to be sitting next to me. And we were talking about, I was like, hey, I think you're you're paying a lot in storage and probably not getting anything for it. If, if the market goes higher, yeah, you get it, but there are lots of less expensive ways to benefit if the market goes higher. And he's like, well, tell me about that. And I said, hey, look, you could sell cash, buy July futures, and just forget about it, right? And wait for the market to go higher, and everybody's happy. And he says, well, yeah. And he points to the wife and he says, hey, yeah, that's easy for him to say. He's not the one making margin calls on the, forced in the July corn. And I'm like, right. But I'm also like handing you $400,000 in October that you didn't have, right? Like, I think the farmer needs to view grain in the bin or whatever as kind of a margin call, right? And I think there's something to this discussion about, you said $130 a day, Jacob. I think things like that could be really powerful, right? If a farmer had to write the interest check every month, right, then maybe he would not be, maybe it would mean something to him.
Well, I mean, so that same exercise, right? Like if he's unpriced and the market's going down, he's not, I guess that's the thing, right? He's not having to deal with the hassle of writing a margin call check.
Right.
Right. But what you should do is have his wife set up a separate account and she can write her margin calls when the market goes down, and they can leave it on price and see which one feels better.
Well, I mean, the nice thing is you can go back in history and literally show people how this would have worked, right? Like you can go back, even 2012, dude would have paid $4 in margin calls, right? Or whatever. Yeah. Okay, let's talk about what that looked like. That's the nice thing about futures. You can go back and do it later, right?
I really started using the cost of money per day with guys a couple 3 years ago when rates started going back up again.
Yeah.
And a lot of farmers, they just want to pay a loan off just so it's gone, right?
Yeah.
Like some of them just don't like having it out there anymore. So, hey, I've had this loan out here and I got enough money to pay it off. So I just want that one gone, but it's at 3% and it doesn't mature for 2 years.
And like, dude, go buy some forward notes. Yeah.
Right. Well, I got this other note that I just started that's like 5 times as much on a principal balance and double the interest rate. But I'd rather pay this one over here off just so it's gone. Well, no. That one's costing you $10 a day to have it out there. This other one's costing you $60 a day. You need to throw the money at this one.
That's a Dave Ramsey thing. You know this, right? Like that's the thing about Dave Ramsey, Gabe. So you know who Dave Ramsey is. He's like this.
I know who he is, but I've never really read or listened to his stuff.
So he's this big famous like financial guru that has a big following, and I'm gonna make somebody mad by having this discussion. They're like, if you're a Dave Ramsey guy, you're a Dave Ramsey guy, and that's who you swear by. But yeah. I disagree with literally every single thing he says. So his number one thing is no credit cards. Pay for it in cash or don't pay for it at all. Right? Like if you can't pay in cash, you don't have it.
Okay.
Well,
okay.
We have credit cards. I put literally everything on a credit card, earn my 3%, right? And then pay that credit card off at the end of the month. So the way I think about it is I'm making 3% annualized on that money. And people have made this argument to him. And he's like, no credit cards. If you have a credit card, you're just going to run up your debt, right? So that's one thing. And then two, the other thing that he does is he wants you to pay off the smallest loan first. I spend every day of my life like saying, hey, we're paying off, this is the, pay down on this, don't pay down on this, like all this. And it's always the highest interest rate. But what he's doing is this mental thing. What he wants you to do is say, hey, I had 6 loans and now I have 5 and now I have 4. But it costs a ton of money to do it that way. You're better off just being disciplined.
Yeah.
Well, yeah. Right. So I definitely disagree with the credit card thing. Rodney, I pay my credit cards probably every 3 days.
Yeah, sure. That's fine.
When I get up in the morning, because it's so easy now, right? Like but yeah, like, I mean, you're so yeah, fully on board with that. I I guess the problem is the guy's probably got a brand that he's like,
That's
holding
what
him
he's dug in.
right in the world. That being said, like, so it's easy enough, right? And this is why you have a job. It's easy enough to say you should be disciplined. It's really hard to be disciplined. And like we need help with that. Most of us do, and getting that view. And so I think like I do very much get the idea of, hey, like it's worth the cost. If the end goal is to get rid of all your debt and you're having trouble thinking about it in the optimal way, you're better off doing something instead of nothing.
Yeah.
And like so, and so I get that part of it, right? I agree with you. Definitely doesn't sound like the right way to do it from what with the calculator out, but I suspect for a lot of folks, it's probably easier to get done, and it's probably kind of like working out, right? Like you
Momentum, right?
get it a little bit, and it's motivating, right? Versus like, oh, I've got a $300,000 loan that has a way higher rate, and I've got $1,000 loan, it's got a way lower one. Like I've been paying off that 300. Like, that's terrible. I don't want to do that. Let me get rid of this little one for yeah. I get it. That very much, and then I mean I guess I understand the credit card position, but yeah, I think that's tough. But yeah, if your customer base or whatever, if your brand is helping people that lack that discipline, then that's
Yeah.
probably where that comes from.
And I will say, as much as I disagree with the guy, I know people personally that have done well using this program and are debt free and feel good.
Yeah.
That's cool. Just not the way I would do it.
Ronnie, I think we're closing up on time here.
Yep.
Uh,
Yep.
Jacob, any closing thoughts on your side?
Rodney, did you get everything from me that you were hoping to?
Yeah, man, but plug your business if you want. So pretend we got some farmer out there that's doubling his acres next year and looking for somebody to loan him money. Should he give you a call?
Yeah, man, we're one of the few lenders that pay patronage. So
Nice.
that's always the big thing that I tell guys. But it's what's funny is that the guys that have never received patronage from us have a hard time like valuing that, right? Like putting a tangible value on it.
Yeah.
The ones that have gotten it love it. So you every once in a while I got to make sure I'm playing that. Hey, trust me, it's we like giving you money in August when the majority of farmers don't have any money. So that's the whole reason we send it out in August because we know that's the tight time, right? But no, it's I guess I don't have a huge plug for Compeer. It's just it's a good spot to be, I think, right now. It's what we do. We're in agriculture, we're in ag lending. It's what we do, and we enjoy working with guys like yourselves and brainstorming and finding different ways to help these guys.
Yeah, I will say Jacob's super well respected in the country. I have multiple customers that work with him. His name's one of those names that comes up a lot. So appreciate what you do for us.
Oh,
Gabe?
same.
Closing thoughts from you, Gabe?
Put in some stop orders.
Put in some stop orders.
Put in some stop orders.
I've got a few working, I think,
Good.
based on our conversation last week.
I don't have my trailing cell stop platform up and running yet, but
Yeah.
I would say if you like these levels but are worried it's going to go higher, put in a cell stop.
Yeah, that's right. Good. And my to-do, Gabe, I'm going to send you a screenshot of what I put together so you can pick it apart relentlessly.
That's my favorite thing to do.
I'm sure I told the story before, but I made what I thought was the greatest bid sheet of all time 10 years ago, 11 years ago. And when I went to work with Indigo, I showed it to Gabe and was like, hey, man, if we're going to make a bid sheet, this is what we want it to look like. And he went to the rest of the company and was like, so this guy thinks this is the greatest bid sheet in the world, and it's terrible in these 500 ways. And I loved it, dude. I loved it.
He'd go to the rest of the company.
It was a big audience. I think it was in the all hands.
No, I'm not that cold, man. Come on.
I loved it, dude. I'll take it all day.
I have no doubt that I tore it apart. That that does sound on brand for me. Anyway.
Good deal. All right. Well, hey, appreciate your time, gentlemen. Good to see you guys.
Good to see you.
Hey, Rodney, one thing real quick.
Yeah.
Last year we had what? Corn over $5 for 3 weeks, 21 days, something like that.
Well, I don't know if we did.
That's a real short window, right?
Yeah, maybe.
Yeah. You got an over under on this year? We're gonna be
I'll
over
take that.
$5
Just personally, again, this is not trading advice. I don't know anything about anybody at your farm. I'll take the under, man. I think we have a hard time breaking through $5 personally. What about you?
Oh, that's kind of my thoughts too. I think with everything we're staring at right now, it's gonna be hard.
Yeah. It's going to take a real problem, right? Which maybe we have a real problem. I hope not.
I'm calling right now, 750 corn.
750 corn. Gabe's in the 750 corn.
Put in the envelope.
All right.
That's
Thank you,
because I want
gentlemen.
these farmers to make some money. I don't know about you guys. Jeez.
That's right.
You and me both, Gabe. You and me
Yeah.
both.
All right. Sounds good.
Thank you, gentlemen. Have a good one.
See you.
Thanks, guys.
Bye. Yeah.